Ja, herzlich willkommen zu einer neuen Ausgabe des E-Talk und heute habe ich eigentlich eine brandneue Story, die kennt ihr noch nicht. Ich habe es auch noch nie vorgestellt, aber was hat mich getriggert? Zwei Sachen. Erstens einmal, die Firma wird bald in Produktion sein, das ist das Erste. Und das Zweite ist, auch die Gwen hat mich getriggert, und zwar nämlich, wie sie zu dem Job gekommen ist oder warum sie diesen Job macht. Weil sie war früher selber im Newsletter-Business, hat selber einen Newsletter gemacht und hat diesen dann aufgegeben und ist jetzt VP Corporate
Communications.
VP Communications bei Red Lake Gold. So, very long name. So, und das hat mich einfach interessiert, warum hat sie das gemacht? Das wäre mir jetzt fragen. Gwen, I said in my German introduction, there are two things was really triggered me. One is you're early or close to production. Mm-hmm. That's the one thing. And I like more, and the Germans like more, the more advanced stores, they are close to production.
Absolutely.
You see then, you can more calculation on it, and you come on valuation and this all these points. And the second thing is you. Then the you run before also, and that was the first time I met you. Not really, but I was in one presentation of the Metals Forum, I think last year at the PDEC. And you run this newsletter and you make your presentation there, and that's very interesting. And the next time I heard from you was that you are VP Communication from this company. So I say, why you switch?
So
I know that this business.
Yeah.
So this is the trigger. Why you switch?
Well, I think what's fun is that the answers there actually overlap. So, like the first question about valuation and the second question about why I switched, those answers come together. So, I spent 10 years building a newsletter business, and I loved doing it. I loved helping people find opportunities to invest and doing that with my own portfolio, of course. We know that the mining business, especially the junior side of it, is pretty risky. And so I was ready for a change, but I wasn't going to pack up my successful newsletter, for an opportunity unless it offered both sort of reliability and upside. I needed to get both of those things. And that junior side of the space doesn't offer the reliability, right? There's a lot of risk down there. And that I didn't want to go there. And in investing, for more years than I want to admit, 15 years, I mean, I knew that my best returns, not necessarily highest, but that best marriage of moderate risk and good return had come from stories that are going from development into production. And so that's what West Red Lake is. It's a company that bought a mine that had failed previously and is fixing those mistakes and is therefore being able to do that developer to producer move right now. And there's hardly any companies that are doing that just because of the metals cycles and permitting timelines and all of that. And then the reason that you get that really lovely return potential, like strong returns with the moderated risk, is that there's a reason to re-rate a stock. You're not hoping for a drill hit. You're not hoping for upside in the metal price. What you're doing is going from spending money to making money, assuming the mine works, but that has to be part of your research. But that's a dramatic change, and that's why companies, before they're in production, the market values them at like 20, 30, 40% maybe of the value of their asset. That's what their market cap is. As you successfully go from having a pre-production to a producing asset, you get valued at 80 to 100% of the value of your asset. That's the re-rate. And that's what I liked about the West Red Lake opportunity. And that's what's happening in 2025. We spent 2024 getting ready to do that. And now we're spending 2025 turning the mine on and earning that re-rate. So if we're worth $190 million in the market right now, the very conservative mine plan that we just put out has a value on our asset of $315 million. So I think that's the opportunity in 2025, is to do that calculatable, real, like put your hands on that rationale re-rate. And then just to put one more layer on that, the mine the Madsen mine isn't only that $315 million. Like I said, that was a really conservative study. And when you look at what we're actually doing, because we're not in a very low gold price environment, which is what drove that really conservative study, when you look at what we're actually doing on the mine site and the opportunities that we will pull in the next few years to add to that plan, we're going to do that in another study this year. And I think that study will peg a value on the asset that is double. I mean, in the 600s, we shall see. But I think there's reason to argue that the mine life will be longer, the throughput will be bigger, the ounces will be higher, and the costs will be lower. I think we can argue all of those points. So then the re-rate to get 80 to 100% of that much bigger number, that's, I think, sort of the 18-month investment thesis. So there you go. Both answers came right together.
Perfect. You said it was this was a mine that failed. So what was the biggest mistake? Why it was really? What's the problem with the old development company or gold production?
Yeah, absolutely. So two things: grade and cost, which are the two things that are most important in any mine. And they made mistakes on both. So on the grade side, they expected to deliver rock to the mill that carried 9 grams per ton of gold. They only managed to deliver about 3.5 grams per ton of gold. Okay. And the reason that happened was they didn't know accurately enough where the gold was, and they didn't mine it in the best way. So we're in Red Lake, Ontario. 30 million ounces of gold have been pulled out of exactly these kinds of deposits in Red Lake over the last 100 years. So it is possible to deliver 9 grams per ton to the mill. But the rule of thumb is that you have to drill these deposits really tightly. You have to have your drill holes maybe 6 or 7 meters apart through the whole thing, because the lenses, we say pinch and swell, right? There's a nice area of gold, and then it pinches down to nothing, and then there's another nice area. And if you just try and mine the whole thing, you end up taking a lot of rock that doesn't carry any gold. So the prior operator's drill holes were 20 meters apart. We've spent the last year hammering the resource that we will mine in the first year and a half, 2 years of operations, so that the drill holes are now, guess what, 6 to 7 meters apart. So that's the grade side of things. The cost side of things is that operator really tried to build this mine on as small a budget as possible. And so that means that they didn't do projects that would have made the mine more efficient. They cut corners, left things out. And that combined with just an approach to how to run a mine, lots of contractors, which meant that there wasn't so much accountability when things went wrong and not as much drive to succeed. That combination meant that costs were way higher. Also, squeezing that budget meant that they pushed lots of cost from build cost into operating. Think about leasing things instead of buying them. It all meant that the costs were high and the grade was low. We're addressing the grade really through drilling, and then we're addressing the costs by doing those capital projects that weren't done previously. We've probably spent $40 million on projects at the mine site to make sure that our operations are efficient. Build a camp, build a maintenance shop, do a connection tunnel so that the two sides of the mine, you have one mine instead of two. Do the tailings dam lift, do all of the things that give you the chance to operate efficiently. So we're addressing the grade, we're addressing those capital projects, and we're just very experienced operators. So we're doing all in-house mining. Our operational readiness is a real driver for the company. So
the previous owner, how much money he spent on the mill and the facility?
Yeah, so the previous operator, over the 7 years that they were at the mine site, spent $350 million. Of that, probably $200 million was the build of the mine. The mill that they built is a wonderful piece of machinery, and it worked very well for them, and we expect it to work very well for us. Gets good recoveries. The gold is not difficult to take out of the rocks in Red Lake as long as you've got the run. So the mill is great. Where they cut corners was on the mining operation side more than anything. They spent $350 million on the project, and then we bought it for $6.5 million of cash and a 1% royalty on the project, and then a stake in our company. We bought it from the company that had the group that had loaned the money to build the mine. They, of course, got the mine when it all went bankrupt.
Okay. So, but it sounds like not a bad deal. They invest previous 350, so you can buy it for a really low price, but you know exactly you must invest more. But hopefully then all the problems are fixed, and then hopefully you can run a profitable business. So it's now is coming to this bottom line. What how many ounces you expect to produce, which all-in sustaining cost, what's coming to the bottom line, that's just the point.
For sure, yeah. So timeline-wise, this is all happening in the next few months. So we're right now starting mining slowly. We're calling it test mining, but really it's just the first parts of mining, and we're putting some bulk samples. We're stockpiling them. So a couple different areas of the mine, we're stockpiling those. When we start the mill up, which is in only a month, the end of February, we'll run those bulk samples through the mill, and then we can show people, we said that this area had this many tons at this grade, this area had this many tons at this grade, this is what we mined and processed, here's what we got. So that comparison, called reconciliation, that is, I think, going to be a really important accomplishment for the company, and that news will come out at the beginning of April. So we're doing that mining right now. But then we're just going to roll into production mining. We're going to build up a stockpile, and then we're going to start putting it through the mill. So by June, for sure, we will be producing gold consistently. That's the timeline. We have the money to do that. We raised money last year, and at the beginning of this year, we signed a debt facility, $35 million US debt facility, that gives us the capital to do this ramp up of the operation. So the money is done. The mine plan, that really conservative mine plan that I described, says that we'll produce 68,000 ounces of gold a year. The all-in sustaining cost will be $1,681, and that will generate, on average, over the 6 years that's defined in this study, that'll produce $70 million annually of free cash flow. Sorry, the all-in cost that I mentioned there was in US dollars. $70 million of free cash flow, that's a Canadian dollar number, of annual free cash flow. And I mean, it would take a longer conversation to go through it, but I do believe we are going to beat on those costs because the mine plan was very, very conservative. And I think we're going to produce more ounces over a longer mine life because we're in a pretty strong gold environment. So we're going to be able to mine bigger areas at lower cost, more tons for each area that we get to, which helps on cost as well. And our mill can handle more tons throughput than this study assumes. So I think we're going to beat the study.
So, but to beat this study, you don't need more to expand the mill or something. There's already all there. Yeah,
so the study assumes that we put 800 tons per day through the mill. The mill can easily run to 11 or even 1,200 tons per day. And it did. That prior operator ran it consistently at 1,100 tons per day. So we have the room to put more tons through the mill without having to spend any more money.
Okay, and when you have more ounces, for sure your all-in cost going down normally.
Yeah, exactly. Yeah, and wider mining widths just mean that you can use slightly less expensive methods for mining. Having more tons in an area means that once you've done the cost of getting to that area, then the cost of that spread over more tons, that's a better return. So yeah, a couple key factors like that.
So coming to shareholder structure. Are there any bigger shareholder groups, whatever?
Yeah, for sure. So the group that had loaned the money, that got the mine when it all went wrong last time, that's Sprott Resource Lending. We bought the project from them, and they got a stake in our company for that. So they remain an 18.5% shareholder of the company. So they're certainly our biggest. And then the company was put together with drive and money from investment from Frank Justra. So he remains a significant shareholder of the company. And then there's a good array of long commodity gold focused funds. So we have Van Eck, we have Ruffer, we have Commodity Discovery Fund. We've got a good list, Primevest, Axe, there's a good list of funds who collectively each own 1 to 4%. So together they probably own 30% of the company. That's sort of those long gold focused funds who understand the the math that we went through at the beginning here, the upside case here. And then the rest is, there's with management and advisors, insiders, there's probably 4%. And then the rest is a retail float.
Okay. Yeah, I think this was a pretty good introduction to your company.
Fantastic.
Thank you for this. And now I try the German seminar. What I not know is she understands German.
Not a lot, but enough to make him worried.
So, and that I must be careful for my German summary. Ja, also sie versteht Deutsch. War früher fließend Deutsch, hat sie mir gesagt. Ja, aber was ich habe es ja vorher gesagt, was mich wirklich getriggert hat, warum war das der Grund, dass ich aus dem Newsletter-Business rein in eine Firma gehe und dort eine Corporate Communication mache. Sie hat das eigentlich sehr gut gesagt. Sie hat gesagt, nicht die Aktien mit den größten Gewinnen, sondern die Aktien, die eigentlich das beste Risk-Reward-Ratio gehabt haben, waren die Aktien, die eigentlich vom Development in Produktion gegangen sind. Dort war der größte Hebel zu heben mit dem niedrigsten Risiko. Und das ist gar nicht so einfach zu finden, diese Firmen, und das war halt eine Firma davon. Warum? Was macht die Firma eigentlich so einzigartig? Ich meine, wir sind ja da jetzt über die ganzen Daten gegangen. Das war eine frühere Mine, wo der vorige Operator versagt hat, muss man ehrlicherweise sagen. Der hat die Mine dort hingebaut, hat 350 Millionen investiert. Wunderschöne Mühle, ich habe es nicht gesehen, ich kann da nur darauf verlassen, was sie ihm sagt. Super Mühle, die funktioniert auch ganz toll, hat auch vorher ganz toll funktioniert, nur die haben den Gehalt nicht hinbekommen. Wie kann man Gehalt nicht hinbekommen? Ja, indem man viel taubes Gestein mit in die Mühle reinbringt. Das heißt, man hat nicht genau gewusst, wo das Gold ist. Man hat gewusst, in diesem Korridor ist. Sie hat das sehr gut ausgeführt. Die Bohrungen waren früher 20 Meter Spacing gewesen, also zwischen den einzelnen Bohrungen waren 20 Meter Platz. Und in Red Lake, Ontario, muss man allerdings zwischen 6 und 7 Meter bohren, damit man genau weiß, wo man quasi das Gold findet. Und dann kann man sehr genau gezielter dieses Gold abbauen. Das Gold ist sehr hochgradig, das ist überhaupt kein Problem. Und man muss allerdings nur schauen, weil das in Linsenform vorhanden ist. Das heißt, da gibt es dann wieder einen Sektor, wo sehr viel Gold ist, wo eine Blase ist, wo das ganze Gold drin ist. Dann geht es wieder zusammen auf eine kleine Venen und dann kommt halt die nächste Blase. Und dort muss ich halt genau herausfinden, wo sind meine Blasen, die ich dann auch dementsprechend abbaue. Wenn ich nicht genau weiß, baue ich den ganzen 20 Meter ab. Und da ist halt möglicherweise dann sehr, sehr viel taubes Gestein drin, und das hat dazu geführt, dass die nur einen Gehalt gehabt haben von 3,5 Gramm durchschnittlich. So, und das war einfach das Urproblem, damit sind die Kosten nach oben geschossen, und damit war die Mine eigentlich zum Scheitern verurteilt. Natürlich ist jetzt der glückliche Zufall, dass auch der Goldpreis massiv gestiegen ist. Wir haben nicht darüber gesprochen, aber es ist klar, wie sie die Mine dann quasi von Sprott Lending gekauft haben für 6,5 Millionen plus einen Anteil am Unternehmen, war der Goldpreis natürlich nur anderer aus, was er jetzt ist. Was haben sie jetzt gemacht die ganze Zeit? Sie haben halt genau diese Bohrungen gemacht, die diese Firma halt vergessen hat zu machen. Sie bohren auch jetzt wie wild, um quasi diese 6 Meter Spacing, 6, 7 Meter Spacing zu haben, damit sie genau wissen, wo das Gold ist. Zweiten Fehler, was die Firma auch gemacht haben, sie haben manche Projekte, Kapitalprojekte, die sie in die Firma investiert haben, also zur Optimierung der Anlage nicht gemacht. Sie haben zum Beispiel Sachen geleast, statt dass sie es gekauft haben, und dadurch haben sie die OPEX natürlich nach oben gedrückt und die CAPEX natürlich nach unten. War natürlich an sich logisch, dass man es macht, aber wenn man dann nicht 9,5 Gramm, sondern nur 3,5 Gramm zur Mine bringt, hat man halt ein Problem. Also da sind mehrere Fehler passiert, die sie jetzt einfach ändern machen. Was passiert als nächstes? Ab Juni sollen sie in Vollproduktion sein. Sie machen jetzt Testproduktionen, wo sie quasi aus den einzelnen Sektoren auch diese Stockpiles machen, also dass sie Erz abbauen, das einmal auf Halde legen, und das wird ab Februar dann verarbeitet in der Mühle, und dann wissen sie auch genau, wie die ganze Mühle läuft. Sie können besser natürlich die Mühle einstellen, und kontinuierlich soll ab Juni produziert werden. Die Mühle soll, oder die Firma soll ungefähr zwischen 67, glaube ich, und 70, 67 to 70.000 Ounces ist at the old plan. Yeah. Also zwischen 67 und 70.000 Unzen pro Jahr sollte produzieren, kosten ungefähr 1650 oder sowas, wie ich mich noch erinnern kann. Und es kommt aber eine neue Studie raus, wo sie davon ausgehen, dass das Minenleben deutlich verlängert wird, die Gehalte natürlich alleine durch diese Spacings natürlich besser werden und vor allem aber auch die Kosten sollen natürlich dementsprechend auch dann nach unten gedrückt werden. Und der Wert der alten Mine war quasi bei 315 Millionen, während die Marktkapitalisierung unter 200 Millionen liegt. Und wie gesagt, sie haben für 350 Millionen eigentlich ist dort investiert worden und sie haben das für 6,5 Millionen plus einen Anteil an der Firma gekauft. Also eigentlich extrem interessant, weil wir hier genau das haben, was wir eigentlich wollen. Wir wollen eine Development Story, die eigentlich kurzfristig in Produktion geht, profitiert von dem starken Goldpreis, was wir haben, der hoffentlich noch weiter steigt. Sehen Sie, das bringt mir jetzt gerade auf eine gute Frage noch. Brings me to my last question. What is your personal expectation about the gold price?
Oh, about the gold price.
This is
Yeah, no,
fundamental
absolutely.
also for the company.
Yeah, I mean, it's the beginning of the year. We have a whole year to sort of look ahead to. I mean, I think for sure $2,900 by the end of the year. Like, I certainly see it strengthening. It could do more than that, but I like to underpromise and overdeliver.
Okay. Yeah, and this is always a good advice.
Yeah, in general, right? In
general.
life.
And in life it's always underpromise, overdeliver. Ja, also Ihre Wartung soll bis 2 Nein. Und ja, das war es eigentlich von West Red Lake Gold. Today is the 20th of
Today
January.
is the 20th. It's the inauguration day. It's the 20th of January.
20. Jänner 2025, WREC aus Vancouver. Tschüss und Baba. Pfiat euch. Thank you.
Thank you.